Hi, I'm Ross Mayfield, investment strategy analyst at Baird, and I'm here for another edition of the Market Strategy Weekly video. I'm thrilled to be joined by Jeanette Lowe of Strategas to talk some policy. Jeanette, how are you doing this morning?
I'm good. How are you?
I'm doing pretty well. Well, let's jump right in because, as you know, on the policy front, there's never a shortage of news, and certainly over the last couple of months, it's just been a deluge. So, some new information on the infrastructure and tax plan that's being unveiled by the Biden administration. One thing that you all pointed out that I think is really interesting and maybe a good place to start is the timing mismatch between the spending and the taxes. Could you maybe talk us through that and how you guys are thinking about that mismatch? Because it's an observation I hadn't seen made elsewhere yet.
Absolutely. So we are looking at Biden overall. He's only kind of proposed one half of his proposal so far, but he's really looking at something close to $4 trillion in spending and $3 trillion of tax increases. But one of the big things that's part of his spending package is infrastructure spending. And we all know that infrastructure spending has a pretty long lag time for it to come out. So it might take up to 18 months for some of that funding to come out, whereas the tax increases would be immediate. So what we're looking at for 2022 is that you're going to have the stimulus that is currently going through the system falling off. So you're going to have a fiscal drag just from that anyways. And then on top of that, if the corporate tax changes that are being proposed go into effect in 2022, the spending is going to take longer than that to come out. So that's not going to come out at the same time. So you would definitely see this fiscal drag where we're going to see more tax increases and less spending, especially in those first few years.
That makes a ton of sense. And I do think it's important to note because despite the fiscal water, there is going to be probably a fiscal tightening next year. And that's something for investors to keep top of mind. One other thing I wanted to talk about before we move forward is on the corporate side of the tax hikes. It seems like the corporate rate is probably only going to move up a little bit once it's watered down, but you all pointed out the above consensus hikes on the multinational and international side. Could you talk through that change or what you expect on that front briefly?
Absolutely. So the proposal, one of the big things that's been kind of always in Biden's campaign was to move the corporate rate back up to 28%. We ultimately think it's going to arrive at 25%. But one of the things that was more surprising out of this proposal was the number of international tax changes that's being included. And so Biden is really trying to go after GILTI taxes, which would really start to impact US multinational companies, in particular tech companies and biotech companies. He wants to make some other changes in terms of, a minimum tax, a book tax on companies. And those changes, I think, are kind of being underappreciated by the market so far. The market's been anticipating that the corporate rate would go up to some extent, and they would almost kind of be okay with that. But once you add in some of these other international tax changes, the impact on these companies is going to be much larger than they're currently anticipating. That doesn't necessarily mean that everything is going to go into effect. We definitely think the companies are going to be lobbying Congress to make changes. And there definitely might be some changes just from opposition within the Democratic Party as well. But it's something to be on the lookout for because it would be a bigger impact than I think a lot of investors were anticipating.
Yeah, that was fascinating to me reading that. And I do think it's really important because it's so easy to just look at the headline corporate tax rate and say, well, this is what it is. But those effective tax rates can be way different by the end. So quickly before we end here, I want to shift to the individual investor side of things. I know there's still some information to be released from the administration on this front, but what do you all expect on the individual investor side as far as tax changes to dividends, capital gains, top marginal bracket, anything along those lines?
Right. So we still haven't seen that actual proposal from the Biden administration. We might get some more details in the coming days and weeks. But they are still looking at increasing the top individual tax rate. So still looking at bringing that back up to 39.6%. They are still looking at kind of limiting tax deductions for these high income earners. They're also looking at a reinstatement of the state and local tax deduction. And they are definitely looking at also making changes to capital gains and dividends taxes. Now, while there's been proposed that they might have ordinary rates for capital gains taxes for people making over 1 million, we're thinking it still falls in the range of somewhere between 25 and 28%. But that is definitely something that the Democrats are looking at. They're also looking at potential estate tax changes. There's 4 different proposals that they can be looking at, whether it's raising the rate, lowering the exemption, moving from a step up in basis to a carryover basis, or doing an unrealized capital gains tax at the time of inheritance. But we think that there is definitely a chance that some of those changes might get into effect. Maybe they just raise the top rate. Maybe they make some changes to the exemption rate. But all of those things are on the table. We do think, though, overall, it might be, easier for them to do a capital gains tax rate more than it would be to an estate tax change. But it's definitely still something to be on the lookout for, because Biden's proposal is still pretty broad, and it's essentially kind of a backdoor wealth tax, and something we want to keep an eye on.
Absolutely. Well, we're glad you all are keeping an eye on it. It's a lot to get our heads around, and we're glad to have the best policy team in the country on our side. So I want to thank you so much for the time today, and we'll be looking forward to hearing back from you all soon, I'm sure.
Absolutely. Thank you, Ross.
Thanks.